Alright, let's get into it. You've probably seen it mentioned online, maybe a friend sent you an invite or you saw a headline screaming about its potential price. I'm talking about Pi coin. So, what is it, really? In the simplest terms, Pi coin is a cryptocurrency project that aims to be accessible to everyday people. Unlike Bitcoin, which requires massive, power-hungry computers to mine new coins, Pi Network lets you mine its currency Pi directly from your smartphone. All you have to do is open the app and tap a button once every 24 hours. The idea is to create a widely distributed digital currency that anyone with a phone can participate in without needing technical expertise or expensive hardware. It's an incredibly ambitious goal, and that's a big part of why it's captured so much attention. People are sitting on hundreds, sometimes thousands of these Pi coins that they've been accumulating for free just by tapping a button daily. Naturally, the big question on everyone's mind is, what will these coins be worth? The project has been in development for years, and during that time, its users, who they call pioneers, have been unable to sell, trade, or cash out their coins. The Pi Network project didn't just appear out of thin air, it has a legitimate origin story. The project was founded by a team of Stanford University graduates, most notably Dr. Nicholas Kokalis and Dr. Chengdiao Fan. Their academic background added weight: blockchain technology, social computing, human-computer interaction. They officially launched the project on Pi Day, March 14, 2019. The mission was clear: build a cryptocurrency and a smart contract platform that is secure, decentralized, and user-friendly enough for the average person to join without the usual crypto barriers. Development was planned in phases. Phase 1 was distribution and user growth. The mobile mining app enabled that. It let the team bootstrap a global community quickly. Early mined coins weren't on a real blockchain yet. They were recorded balances on a central server. The promise: they'd be honored when mainnet launched. The strategy worked. Users exploded into the millions, driven by a referral system. Next came Phase 2, the testnet. Developers released node software. Tech users ran test nodes on their computers. This helped decentralize the network. It let the team test performance and security under real conditions. Then, December 28, 2021, the enclosed mainnet period began. Mainnet is live. A real blockchain exists. Users who pass KYC can transfer mined Pi to their own wallets, but it's enclosed. A firewall blocks connectivity to outside exchanges and other blockchains. You can send Pi to other verified Pi users. You can use Pi in approved Pi apps. You cannot sell Pi for dollars. You cannot sell Pi for Bitcoin. You cannot sell Pi for any other currency. This has created a massive amount of pent-up speculation. Everyone is hoping that one day, the network will fully launch and their digital stash will suddenly have real-world value, potentially turning early adopters into millionaires overnight. So, where does that leave us today on September 8, 2025? We are deep into the enclosed mainnet period, and frankly, it's been going on for a while. The core promise of this phase was to allow the community to focus on building utility for the coin. The developers envisioned a thriving ecosystem of applications, marketplaces, games, services, all running on the Pi platform and using Pi coin as their native currency. By keeping the network enclosed, the theory is that it prevents speculative traders from crashing the price before these utilities have a chance to develop and create genuine demand for the coin from within the network itself. During this time, the main activity for users has been twofold. First, continuing to mine daily to increase their Pi balance. Second, and more importantly for the network's progress, is completing the KYC process. KYC, or Know Your Customer, is a verification process that requires users to submit identification documents to prove they are a real, unique person. This is a critical step to prevent people from creating multiple fake accounts to mine more coins, which would devalue the currency for everyone. The KYC process has been notoriously slow and has been a major point of frustration for many users who have been waiting months, or even years, for their turn to get verified and migrate their coins to the mainnet. From a practical standpoint, the enclosed mainnet has seen some limited success in fostering utility. There have been a handful of hackathons developer initiatives aimed at encouraging the creation of Pi apps. Some rudimentary marketplaces have popped up where users can barter goods and services for Pi, but this is happening on a small peer-to-peer scale. These transactions are based on an agreed-upon consensus value among the participants, not a market price. For example, a group of users might agree that one Pi is worth $10 for the purpose of their internal trade, but this is a localized agreement and not a reflection of a global liquid market value. The ecosystem is still very much in its infancy. The big question hanging over this entire phase is, when will it end? The core team has been deliberately vague, stating that the transition to the open mainnet, where the firewall comes down and Pi can be listed on exchanges, will only happen when two conditions are met. First, the completion of mass KYC for a significant portion of the network. Second, the creation of a mature and diverse ecosystem of apps with real utility. Because these goals are not tied to a specific date, it has left the community in a state of perpetual anticipation. This is probably the most confusing part of the entire PiCoin saga, so let's break it down. You might go on a crypto data website like CoinMarketCap, or even some smaller exchanges and see a price listed for PiCoin. Sometimes this price is a few cents, and other times it has been as high as $30 or $40. Seeing this naturally gets people incredibly excited. They look at their Pi balance on their phone, do some quick math, and start dreaming about buying a Lamborghini. However, there is a shocking and crucial truth you need to understand. This is not a real price for the Pi you have mined. You cannot sell your coins for this price. So, what are you actually seeing? The prices listed on these exchanges are for what's known as an IOU, which stands for I owe you. Some exchanges decided to list a derivative or a placeholder for PiCoin to capitalize on the hype. Traders on these platforms are not buying and selling actual Pi coins from the mainnet. Instead, they are betting on the future price of Pi. When you buy a Pi IOU, you are essentially buying a promise from the exchange that they will give you one real Pi coin if and when the open mainnet launches, and they can acquire the coins. It's pure speculation on a future event. The Pi Network core team has repeatedly and explicitly warned its users about these IOU listings. They have stated that they are not affiliated with any of these exchanges, and that these listings are being conducted without their consent or involvement. They have cautioned that the price of these IOUs has no connection to the eventual real-world value of PiCoin once the open mainnet goes live. Alright, let's talk about the optimistic side of things. What could actually cause a PiCoin breakout? The single biggest argument in favor of Pi is its colossal user base. As of our current date, over 55 million engaged users. No other crypto project launched with a pre-built community this large. If even a fraction of these users become active participants in the ecosystem, buying, selling, using Pi for goods and services, it would generate massive organic economic activity. This user base represents enormous potential network effects. Value increases exponentially as more people use it. Another major bullish sign, a successful killer app on Pi. Imagine a developer created a social media platform, freelance marketplace, e-commerce site, each attracting millions from inside and outside the Pi community. If the app exclusively used Pi for transactions, it would create immense, sustained demand. The official open mainnet launch would be the most significant event. The moment the firewall drops and Pi becomes listable on major exchanges like Coinbase, Binance, Kraken, a top-tier listing provides legitimacy, liquidity, exposure to a massive new pool of investors and traders. First-time pent-up miner supply meets real external demand from the global market. Now, for a dose of reality. Look at the other side of the coin. The most glaring issue is the incredibly long development timeline. The project launched in 2019, and here we are in late 2025. Still stuck in an enclosed mainnet. This slow progress has led to widespread skepticism. In crypto, projects that lose momentum often fade into obscurity. The second major headwind, a massive, and I mean massive, supply of coins. Over 55 million users mined for free over several years. That makes the total supply astronomical. Basic economics. Extreme supply usually means low price unless there's equally massive demand. When open mainnet launches, expect immense selling pressure. Millions will likely try to cash out, at least partially. That flood of supply could overwhelm early buyers and push the price to fractions of a cent for a long time. Another big risk: failure to build a compelling ecosystem. Pi's value relies on developers building useful apps. But what if they don't? Developers want robust tech, solid docs, and strong financial incentives. Pi competes with established platforms. Ethereum, Solana, Cardano. Those have thriving developer communities. If Pi can't attract top-tier talent, it could become a ghost town of low-quality, unused apps. Without real utility, Pi is just a speculative token with huge supply, a recipe for failure. If you're trying to figure out where PiCoin is headed, forget about the IOU prices and focus on the real fundamental catalysts that will actually matter. The number one factor, without a doubt, is the official announcement of a date for the open mainnet launch. This is the event everyone is waiting for. Any credible communication from the core team, blog post, white paper update, in-app announcement that provides a firm timeline, will be the most significant bullish signal possible. Conversely, more delays or vague statements will only increase skepticism and could cause people to lose interest, negatively impacting its future potential. The second key metric to watch is the progress of user migration to the mainnet. This means tracking the number of users who have successfully completed the KYC process and have had their PI balance transferred to their mainnet wallet. The core team has stated that a critical mass of KYC'd users is a prerequisite for the open mainnet. You can often find stats on this within the Pi app or through official announcements. A rapid acceleration in KYC processing and user migration would be a strong indicator that the team is preparing for the next phase, which could positively influence future market sentiment. A continued slowdown or halt in this process would be a major red flag. Pay close attention to the development of the Pi ecosystem. This goes beyond just counting the number of apps. Look for quality. Are there apps that are gaining real user traction? Are developers announcing innovative projects being built on Pi? The Pi browser is the gateway to this ecosystem, so exploring it can give you a first-hand look at its maturity. The announcement of a killer app, one with a genuine use case and a growing user base, would be a huge catalyst. It would prove that the platform can support real utility, which is essential for creating long-term sustainable demand for the coin, independent of pure speculation. Finally, keep an eye out for any news regarding partnerships. While a deal with Amazon is unlikely in the near term, any collaboration with established businesses or payment platforms would be incredibly bullish. This could start small, perhaps with online retailers, service providers in specific regions where Pi has a strong user base. An announcement that a recognized company will integrate Pi as a payment option would provide immediate real-world validation. These partnerships are the bridge between Pi's enclosed digital world and the global economy. They are a clear signal that the project is being taken seriously outside of its own community, which is crucial for long-term price appreciation. I have to be completely honest here, because this is the most important part. While the potential for a breakout is exciting, Pi coin is an extremely high-risk speculative venture. The biggest risk is that it could ultimately be worth zero. There is no guarantee that the open mainnet will ever launch, and even if it does, the coin may have no significant value. You have invested your time, perhaps some personal data for the KYC process, but you should never ever invest actual money into buying Pi accounts or engaging with third-party sellers. The project is still in an experimental phase. Treat your mined coins as nothing more than a lottery ticket until proven otherwise. Another risk is opportunity cost. Every day on the Pi app is time you could spend on other things. Tapping a button once a day isn't a huge commitment, but the mental energy and hope invested can be significant. If you invest in speculative Pi IOUs on exchanges, you're taking on immense financial risk. This is gambling, not investing. That money could be put into much safer proven assets like an S&P 500 index fund with a long history of reliable returns. Privacy risks, data security risks. To move coins to mainnet, you must submit personal ID documents via KYC. Pi claims to use a third-party provider and handle data securely, but anytime you share personal info online, there's an inherent risk of a data breach. Weigh the uncertain future value of Pi against the real risk of sharing sensitive data. You must trust the organization to protect your information, which is a big leap of faith for an entity not fully transparent about its corporate structure. Finally, market risk is enormous, even if things go right. Assume mainnet launches and the ecosystem grows. The price of Pi will still face wild crypto market volatility. If launch occurs in a crypto bear market, initial price could be severely depressed. Immense selling pressure from millions of miners could create a downward price spiral. The path to a stable, valuable Pi coin is filled with obstacles, and assuming a smooth ride to riches is dangerous and unrealistic. So, after all that, what's the bottom line on Pi coin? Is a breakout imminent, or is this whole thing just a pipe dream? The honest answer is that nobody knows for sure, and anyone who tells you they do is trying to sell you something. Pi Network is a massive, unprecedented experiment in cryptocurrency distribution. Its greatest strength is its community of over 55 million potential users, a network effect that could, in theory, create a powerful and valuable economy. If the core team can successfully transition to an open mainnet, a functional mainnet, a utility-rich mainnet, the potential for an explosive price discovery is certainly there. It's the ultimate crypto lottery ticket that millions of people are holding. My final advice is to approach Pi coin with a mindset of cautious optimism, heavily weighted on the side of caution. If you've been mining Pi, there's no harm in continuing to tap the button once a day. It costs you nothing but a few seconds. Treat your Pi balance as if it's worth zero, because right now it is. Hold on to your lottery ticket, but don't start planning how you'll spend the winnings just yet.